Beginning plus purchase minus? Yes, so you can plug and play, you can always find out COGS. See, meaning of COGS is how much inventory is consumed. So at the beginning of the year, if you had 100, okay, this is your opening inventory of 100. During the year, you purchase another 200. But at the end of the year, if you are left with only 150, or let's say 170, then can I say that you've consumed 130, which is your COGS. So if you have opening, if you have closing, if you have purchases, you can always find out COGS. Yes? Should I move on? Consume means COGS. Okay. Consume means consumed and sold. There is a difference. See, your inventory is made of raw material, work in progress and finished goods. आपने 5,000 रुपए का raw material खरीदा. Then you processed it. So in the process, you spent 2,000 of labor. It became work in progress. Then you did packaging, so that the value of this material now is 10,000. So what I say is that raw material is consumed in the manufacturing process. But this is not my COGS. What is my COGS? If I sell half of my goods, selling is important. Cost of goods sold, COGS. So if I sell half of it, my COGS is 5,000. If I sell 30%, my COGS is 3,000. If I do not sell anything, my COGS is 0. So in order for it to become COGS, it must have been sold during the year. It is yes. LIFO, FIFO, specific identification and weighted average. Last in, first out. First in, first out. You will have to specifically identify what is what, and then of course the weighted average. That okay, do you want to do an example, or may I assume that you are clear with this? Clear? Now, which methods are permissible under US GAAP? LIFO is not allowed. Everything else is permissible, and here all the 4 methods are permissible. Sorry. In IFRS, LIFO is not allowed. Everything else is permissible, and here all the 4 methods are permissible. So in case of FIFO, COGS would consist of first purchase, first in, first out, and the closing inventory would consist of items last purchased. Because it says financial position, that means it's talking about balance sheet, and on balance sheet the appropriate method is FIFO. See, the simple rule is that we want recent prices to be on balance sheet, we want recent prices to be on income statement. So on LIFO, recent prices are on the income statement. On FIFO, recent prices are on the balance sheet. Therefore, FIFO is good for balance sheet, LIFO is good for income statement. Of course, now the answer is it does not say more or less, it says which is true profitability. The answer is no. Tell me the answer in deflationary scenario. Prices are falling. Reverse. Deflationary scenario. When prices are increasing, reverse. Whether it's inflation or deflation, it does not matter. So on balance sheet is always FIFO, on income statement is always LIFO. Why? Let's assume a scenario. These are your purchases. Quantity 10, 10, 10. An inflationary scenario, price is 5, 6 and 7. A deflationary scenario, price is price is 5, 4 and 3. When you are preparing your income statement, you would always want the recent prices to come on the income statement. So when I use LIFO on income statement, in inflationary scenario I get price as 7, in deflationary scenario I get price as 3, which is the true measure because these are the current market prices. Right? When I use balance sheet, when I use FIFO, assume that I have sold 20. So when I am preparing my balance sheet, so on my balance sheet, when I use FIFO, first in, first out, these two are gone. Sorry, these two are gone. So on my balance sheet, it would come at 7 and 3. So in both the cases, it is again correct. So it does not matter whether it's inflation or deflation. On balance sheet, FIFO is always correct. On income statement, LIFO is always correct. But of course, we don't have a choice of using these two methods separately. Should we move on? Yes, is it done? Yes. Are you getting the same answers, all of you? LIFO COGS is how much? 31. FIFO COGS is 23. And weighted average? 26.6. आपका मनोज आ गया? Can we move on? No, this is basic. The answer is LIFO. ठीक है ना? Still LIFO. It doesn't matter which, deflationary, inflationary. Answer is again LIFO. Okay, which method would give higher ending inventory balance? Think again. Yes. The answer is LIFO. See, last time first out, last जो inventory आएगा वो सस्ता होगा, वो COGS में चला जाएगा. So जो बचेगा, that would be earlier inventory, which would be more expensive inventory. So it would give you a higher inventory balance. Should we move on? Yes, what is the answer? B. The answer is B. That we are concerned about LIFO and FIFO if the prices of acquisition are changing. If prices are same, if you make 5 purchases, 10 units, 15 units, 20 units, 30 units, 10 units, and all of them are purchased at 10 rupees per unit, if the prices are stable, no matter which method you use, your COGS is always going to be same, right? So you don't have to worry about it. Are we good? Should we move on? मतलब आपका इन्वेंट्री जो बैलेंस है वो सेम है, मतलब जितना भी आप इस साल में बेच रहे हो वो नया खरीद के बेच रहे हो. हाँ, इट्स नॉट इंक्रीजिंग और डिक्रीजिंग. चलेंगे? The answer to first question is yes. The answer to second question is, see, that generally we would encounter an inflationary scenario, and in inflationary scenario your FIFO inventory is always going to be higher than LIFO inventory. So you simply take the difference between these two inventory balances, which is going to be your LIFO reserve. So This reserve is used for what purpose? That in US, those firms which are using LIFO, if their inventory balance is 30, they would write in their notes to accounts that had FIFO method of inventory valuation been used, the amount of inventory, ending inventory balances would have been higher by 15 or 20. So that 15 or 20 is your LIFO reserve. So if I simply add 20 to this, what I get is my FIFO inventory. Right? So when you want to compare a firm with LIFO and FIFO, you can add up the reserves. Shall I again? Yes, but ideally it is to be calculated as FIFO minus LIFO, and it should be positive in inflationary scenario. So this is the answer. It's the difference between LIFO and FIFO. Firm using LIFO are required to disclose LIFO reserve in their footnotes. Shall I go again?
Like there is one more condition. So for LIFO reserve to be positive, one more condition is
inflation and rising inventory.
Rising inventory.
So for using FIFO, they don't have to.
No. What will they show? FIFO reserve.
Because LIFO reserve, that they don't use FIFO, the difference is that there would be LIFO reserve. There is always.
Firm using FIFO.
Yeah.
Why would they require LIFO reserve?
So it's only if they want to convert from LIFO to FIFO. So
LIFO reserve is calculated only by those firms which are using LIFO. See, you think of LIFO as some sort of a vicious method. It's not, in fact, even in India we do not use LIFO. So, why we don't use LIFO? Any intuition?
Saves tax.
Okay, saves taxes is one, of course, yes. What else?
Emerging markets, inflationary.
Yes. And the amount of inventory on your balance sheet would always be different than ideally what it should be at the current pricing. Right? So we want, and then with the pricing scenario that exists in India, the difference might turn out to be substantially higher. But US uses LIFO, so those firms which decide to use LIFO, they will show LIFO reserve. That's it. So that if an analyst is comparing a LIFO balance sheet versus FIFO, he can make the adjustments. Moving on. No problem.
Here it was written no parking, so I can connect and park on the left hand side. And there is no parking or no board over there. I have installed that it is in left hand side.
If you get caught, the best practice is take out your car and park somewhere else. If you're not caught, you can do whatever you want to do. Yes, is this correct? No, it should be the other way around, where we should say LIFO reserve is equal to FIFO inventory minus LIFO inventory, because FIFO inventory ideally would be higher than the LIFO inventory, so the difference between the two is LIFO reserves. So both the equations. Now this is something in fact you can write down, you should write down these things. There is no FIFO reserve. Anyone of you carrying those exams that we conducted? So we can solve some of the questions. Should we move on? Okay. So, how can I convert LIFO COGS to FIFO COGS?
LIFO cost minus 1 minus change in the liquidation. Sorry, 1 minus change in the LIFO reserve. Beginning, like ending minus beginning, like the change in the LIFO reserve. So it should be addition, right? Yeah, it should be like, because LIFO cost would be more than LIFO cost.
Can you say it again? What did you say?
So it should
No,
be.
no, your last line. Which costs would be higher?
LIFO cost should be less than the LIFO cost.
So we are going to
Reduce
it.
change.
See, I'll tell you. Just think of it this way. You haven't missed much if you remember level 1. We are on inventory. See, it's like this. This is year 1. This is the amount of LIFO inventory. Okay, so this amount of LIFO inventory is 30. Amount of FIFO inventory now, let us say, is 45, and which makes sense that FIFO inventory is higher because it's an inflationary scenario. So higher amount went into my COGS. I take difference between the two, so my LIFO reserve here is 15. Okay. Now it will take us some time. Wait, I think it's time well invested. Do an example. So you can have this example, it will help you build this concept. Let us say we make 3 purchases in a year. Quantity 10, 10 and 10. Write down price per unit 10, 20 and 30. Now goods sold are 20 units and whatever might have been the price. So we are not concerned about price. If the method of inventory is FIFO, then your COGS and closing balance, and method of inventory valuation is LIFO, then let's calculate COGS and closing balance. Manoj, can you tell me what would be the FIFO COGS?
LIFO COGS minus ending minus.
No, we just want COGS. हमारे पास ये है ना, हमने 20, we have sold 20 units. FIFO मतलब कौन सा बेचा है? ये वाला और ये वाला. So कितना हो गया? ये 100 रुपए का, ये 200 रुपए का. So COGS is 300. इन्वेंट्री में क्या बचा है आपके पास? आखिरी वाला 10, which is 300. LIFO COGS last in first out, 300 plus 200.
So plus ending inventory will be 300 plus 200.
300 plus, and this is 100 closing balance of this one. Is this okay?
Yeah.
Now see that the difference between closing balance of inventory 300 and closing balance of inventory, this is 100, is how much? 200. This is my LIFO reserve. So LIFO reserve here is 200. Now can you also find out that difference between these two is also 200? Difference between COGS in year 1 is also 200. So in year 1, difference between COGS is equal to difference between closing inventory. Can I say that? Yes, and it would always be the case that in year 1, difference between COGS and difference between closing inventory is always going to be same. You see, total का purchase था 600 का. So 300, 300 and 500, 100, but the difference has to be same. If it is not taken care here, it would be taken care here automatically. No, it has to be.
After only after 1
Only in year 1. Only in year 1. Why? Because in year 1 at inception your LIFO reserve was 0. LIFO reserve increases on a, think of LIFO reserve as a balance sheet item. It is not on balance sheet, it's a disclosure component, but think of it as some sort of an asset or some sort of a liability. It increases every year. Okay, so it's an accumulated item, and by what amount it would increase? It would increase by the differences in two COGS. So here the difference in two COGS was 200, and then that has gone into increasing my LIFO reserves by 200. So next year, if the differences in two COGS is 150, my LIFO reserve will become 350. Year after that, differences in two COGS is 200. Of course, LIFO COGS is higher than FIFO COGS in all the cases. So if that difference is 200, my COGS will become, my LIFO reserve will become 550. So differences in LIFO COGS is going to, differences in the two COGS is going to increase the amount of LIFO reserve on balance sheet, assuming that LIFO COGS is higher than FIFO COGS, which should be a case in inflationary scenario and quantity rising. Are we okay? So then, if I get to know that my LIFO reserve has increased by 200, can I say that in this year my LIFO COGS must have been higher than FIFO COGS by 200? That's it. So if I want to know, if I have LIFO COGS, if I have two LIFO reserves, I know that my LIFO COGS was higher than FIFO COGS by 200. I simply need to minus that. I have my FIFO COGS. So don't mug up the formula. Do it logically. That my LIFO reserve is going to increase by the amount of differences between two COGS, assuming LIFO COGS is higher than FIFO COGS. Yeah.
So in second year, if basically LIFO increases, LIFO reserve increases, then if you want to convert LIFO balance sheet to LIFO, how will match it?
That's a bit tricky. We have that question coming. That how do you convert balance sheet? Because to take it on balance sheet, you have to consider impact of taxes. So that would be a bit tricky. We'll do that once you're comfortable with basics. Now, one humble request: please call me Utkarsh, all of you. Yes. FIFO COGS is equal to LIFO COGS minus the difference between two reserves. And what is the intuition behind this formula? Okay, I think I will have an Excel sheet here. Click on. Excel sheet seems to have disappeared. Anyways, we know the intuition now. Moving on. Let's solve this particular problem. Simple question. Done? Out. Ending inventory is how much?
2900 is the COGS.
Question is okay. It's asking you COGS as well. Yeah. COGS would be how much? 2900. See, it has increased by 100. Okay. So LIFO COGS is how much? It is 300. 300 minus 100, it would be 2900. And as far as ending inventory balance is concerned, my LIFO reserve is 300, my inventory is 700. So this is going to be 1000.
Just explain this.
Which one?
CHS.
COGS. How much is LIFO COGS? 3000. ठीक है. FIFO इससे कम होना चाहिए. So it should be lesser by what amount? It should be lesser by the amount by which LIFO reserve has increased.
100.
So it has increased by 100. So minus 100. Are we good to move on? Manoj,
Yes, sir.
आ रहा है समझ में? नहीं. Let's do one more. LIFO reserve year 1, year 2, 700, 1200. LIFO COGS 1200, 1500. LIFO inventory 2200, 2900. Find out FIFO inventory in year 1 and year 2. Find out FIFO COGS in year 1 and year 2. Assume that this is the first year of operation. This is first year of business. Done. FIFO inventory in year 1 is how much? 2900, correct, which was simply 2200 plus 700. This would be how much? 4100. Now FIFO COGS in year 1, we'll have to see by what amount LIFO COGS has increased. Sorry, by what amount LIFO reserve has increased. Since this is year 1, at the end of previous year LIFO reserve was 0. So it has increased by 700. So my FIFO COGS would be 1200 minus 700, it would be 500. Next year my LIFO reserve has increased by 500. So 1500 minus 500, 1000. Are you clear? Difficult? They're in fact the easy marks on the exams. It's one now.
F inventory, FIFO inventory was 3200, right?
FIFO inventory, I simply add LIFO reserve to LIFO inventory, that's it.
Yeah.
So whatever it comes to, that's the answer. If prices are rising and inventory quantities are stable or increasing, LIFO reserve will increase or decrease? It would increase. So when would LIFO reserve decline? Deflationary scenario, or the quantity is declining. When the quantity is declining, in that case your LIFO COGS might be lesser than FIFO COGS, which means that it's going to result into lesser amount of inventory balance in FIFO compared to LIFO, so reserves might be declining. So this is exactly what is called as a LIFO liquidation. So there is one interesting question. For at this stage, what you should know is that LIFO liquidation is when LIFO reserve declines, and it declines in a normal inflationary scenario, and it would generally happen because quantities are declining. That means you are keeping less amount of inventory balances with yourself. Now read this carefully and tell me. Is this profit sustainable? The answer is no. See, it's like this. That in 2005 you purchased 100 units of inventory for 10 rupees per unit. Now in 2006 you purchased another 100 at 12 rupees per unit. You did not purchase anything in 2007, did not purchase anything in 2008. In 2009 you sold 200 units at the rate of rupees 20 per unit. So now your total purchase price was 1000 plus 1200, 2200 और आपका sales price कितना है 4000. So your profit is how much? 1800. But what if I tell you that the same inventory in 2009 might cost you 25 rupees per unit? So technically, as far as accounting is concerned, you've made profit, but you would not make profit next year because you've finished your old inventory now. Is this clear? Assuming the quality of the inventory was intact. That when you use earlier period inventory in a rising price scenario, that earlier period inventory was of relatively cheaper price because recent inventory was higher, which would reduce your costs and which would increase your profit. But eventually that earlier inventory would get over, so this profit is not sustainable. So of course the answer is no. Solve the question. सेलिंग प्राइस की जरूरत नहीं है इसमें. एट 300, 440 फर्स्ट प्रिंट 1,2,160, 280, 340, 740, 3,728, 860 is the delta. Manoj, done. See, there are not many calculations to be done. How many units you have sold? 440. So 160 out of these, 140 out of these, and 140 out of these. 300, 440. Correct? Now, if you would have produced these units today, it would have costed you 14 per unit. But since you are using the earlier one, this is 1 rupee lesser, so benefit of 1 rupee. This is 2 rupee less, so benefit of 2 rupees, and this is 3 rupee less, so benefit of 3 rupees. So, 60, 280, 3, 420. So this is 5,7,860 total benefit. हाँ, लिक्विडेशन के बारे में बात कर रहा है ना. Generally, it's LIFO liquidation. Are we okay? Should we move on? This is an interesting question.
Market and
Yes. See, the simple thumb rule is, I don't know if you did anyone think of it. No one really asked me. Even in your level 1, that we follow historical cost concept in accounting. So if I purchase an asset for 20 lakhs, even if that value in the market has come out to be 5 lakhs or it is 25 lakhs, I don't care. I would show it as 20 lakhs unless and until I am testing it for impairment. Why do we with inventory show it at cost or market value, whichever is lesser? Are you following my point? That let's say you purchase a building. Now the cost of this building is 20 lakhs. In the market, if it's 15, if it's 20, if it's 25, we don't worry so much. But if inventory we purchase for 20, if in the market it's 15, we say that it should always shown at cost or market value, whichever is lesser. Why do we worry about this 15? Because your intention is different with these two assets. When you purchase building, your intention is that you will keep it with yourself and you will use it till the building is not completely depreciated. So even if prices change, it does not really affect you. But your intention with having inventory is that you want to sell it as quickly as possible, and therefore market prices are going to affect. And therefore, using conservatism, you would show it as, the simple thumb rule is cost or market value, whichever is lower. Okay. But then, even within that, there are slightly different set of rules in US GAAP and IFRS. So let's go through them. This is the first one. This is relatively easier. This part you can write down. This will help.
in previous question, we were finding out inventory. We were not comparing this cost and
No, we were simply using FIFO method. So you are finding out cost. Now we are comparing that with market value.
What is like in previous question we were not comparing this.
No, we are not.
That also would come into the balance
Previous question.
like in FIFO and LIFO method we have calculated.
LIFO and FIFO is used to find out cost.
Also in
LIFO and FIFO is used to find out what is the cost to be shown on the balance sheet.
we also find out inventory, right? No. Ending inventory.
नहीं मैं COGS नहीं कह रहा हूँ, मैं cost कह रहा हूँ, मतलब ending inventory. So LIFO and FIFO is used to find out ending inventory. Once you find out ending inventory using LIFO or FIFO, then you use market value to compare it. समझा? So we had this issue. Okay, so there is something called articles. In chartered accountancy, when someone passes an exam, he is required to go through a compulsory articleship, 3 years. So what happened is that we recruited a few articles. Now what happens with this is they've studied, they've recently passed, so they've studied, they think that since I passed I know. So what these guys were doing is that we were on Tata Blue Scope, it was a Tata Group company, we were doing inventory for them. So sir FIFO करके inventory आ गया, so अभी market value का क्या जरूरत है, FIFO use कर लिया. So the confusion that happens to a lot of people is that to find out cost, you will use either LIFO or FIFO or specific identification or weighted average. Cost मतलब ending inventory जो है आपके balance sheet पे वो. And then once you have this using one of those methods, then you would multiply this with market value or net realizable value, and then the one which is lower is the one that you would like to show on the balance sheet. So here it says cost or NRV, whichever is lower, and now NRV is simply sales price minus selling cost. And again, a lot of people think that this selling cost means cost of that good. It's not that. If I'm selling something and I pay commission of 2 rupees, 5 rupees to the agent, so when I sell for 100, I pay commission of 2, my net amount that I receive is 98, which is selling price minus selling cost. Are you okay? So if there is any loss, recognize loss on the income statement, write up if the subsequent recovery, but the amount is restricted to original amount of loss.
So the selling cost is it like a sunk cost which you will have to bear?
Selling cost is like a
Is it the sunk cost?
sunk cost.
Yeah, because that you'll have to bear the commission even if you don't sell it.
No, it's not.
So
It's not.
what you sell it?
See, for example, okay, I'll give you an example now. Let's say what we are currently doing is we've tied up with the US website. We are selling our CFA videos there. Okay. So irrespective of what price every video that we sell there, they are going to charge us. Let's say if we sell a video of 100 rupees, they are going to charge us 2, the website. So a client pays us 100, that website would charge us 2. This is our sales cost. This is the selling price. So the net revenue that we have after every video is 98. Same is the case in any sales industry, that no matter what sales you make, especially consumer goods, that when you sell something, if you go to this Chrome, Tata Chrome or any of those kind of goods, that the salesman which exists on floor, they are given commission behind every goods. It's kind of a trend in that industry. So if they sell a good for 100, they would take a commission of 1. So net amount that company receives is 99. Is this clear? This is US GAAP. Remember this, we did this in level 1. So we created a flowchart. See, cost is to be compared with replacement cost or replacement value, and this replacement value is also known as fair value. But this replacement value has to be a logical number, it has to be within a price band. So the lower end of this price band is NRV minus a reasonable profit margin, and this upper end is simply net realizable value. And NRV again is selling price minus selling cost, and this profit, so minus profit here, and this is simply selling price minus selling cost. So for example, if your cost is 200, you go to market and you ask someone that if I want to replace this set of asset, at what price I would be able to replace them. Let us say you will be able to replace at 130. So this is lower, but then I have to put a test on this number, that is this number rational. So then what is the general selling price that I have? The fact that now this cost has reduced down substantially, let's say my selling price is about, okay, we'll do it here, my selling price is about 170, and on an average every unit that I sell, I charge a selling cost of 10 rupees, so my net amount that I receive is 160. This is 170, this is 10. The average profit that I charge on these is 40. So then this side is coming out to be 120, this side is coming out to be 160. Is my 30 between these two? If the answer is yes, I can use 130 as it is. Instead of 130, if this was 140, I can use it as it is. But had this 130 been actually 170, which is outside this band, then the number that I want to use is 160. Had this been 110, the number that I want to use is 120. Right? So this is the lower band, this is the upper band. It has to be between these two. So just make the flowchart.
And so what is the meaning of replacement of inventory?
Replacement simply means market value. At what price I can replace my existing asset. See, in fact, all these terminologies have picked up from the taxation laws. That how do I find out the appropriate fair value for particular asset? So one of the tests is replacement value. That if I want to replace the share with some other share of similar nature, so how much would it cost me? Which means it's market value. But the share is a year old, so I'll go and try to find out a year old share, so that price would be slightly lower.
If you are comparing cost with, if you are comparing the, if you are using this cost assumption, I don't know what exactly it's called, but if you are using it, then we don't have to worry about LIFO liquidation, because we are basically assuming, we are making sure that that cost is not like below the actual
Not above.
Not above.
Yes. But on your income statement, it would reduce down. See, in LIFO liquidation, this would never be a problem. Why? Because LIFO liquidation means increasing prices, decreasing quantity. And if the prices are increasing, then you're using LIFO method. So then your inventory value, which is older prices, will always be lesser than the current market price. So this question doesn't come.
LIFO liquidation can happen in case of a decreasing price trend as well.
Yeah, but then it's not called as LIFO liquidation. LIFO reserves decreases, but it would not be called as a LIFO liquidation. Are we good? Any questions?
I just want to understand, when we are trying to compare the cost with the replacement value, so will it always happen that operatively when we are trying to calculate the NRV, the selling price will always, we will try to keep it more than the cost of the product. So
Yeah, that's logical, because if the current market value of that product in the market is 130, I will have some profit and then I will sell it at a higher price. Which is, and see, why do we have this test? If I am selling this product for 70 rupees in the market, my selling cost is 10 rupees and I am still making a profit of 20. So then 60 and 20, this is how much? 40. So then probably I am bluffing here. My replacement cost is not a correct number. Because if I am selling at 70, if I am still making a profit on an average of 20, selling cost was 10. So let's say I am selling at 60, I am making a profit of 20. How can I say I am buying it at 130? So this is a normal check that is being implemented. So it is the job of the auditor to make sure that this number is rational. The IFRS doesn't do any such check. So as far as your exams are concerned, you need to know this flowchart. Cost versus replacement value, lower band, NRV minus profit, upper band, NRV. That's it.
So why are the banks deciding like this? NRV, but from NRV you're removing profit to get the lower.
To get the cost, true cost.
But this profit is, how are you getting these values?
General profit. On an average, how much is the industry earning per unit? It's not a profit on a particular product, it's a general profit margin.
It's called something, right? Like there is a specific word for like finding out the profits of the industry. So it's called, I think they are like, for example, for IT industry, they find out like 15% is the margin that you have to make sure that you get the profit.
Cost plus pricing, you are talking about.
There is like some specific word. Benchmark. Benchmark. No, not benchmark. Anyways, like if I
Okay. Done. How much is the value in IFRS? 200 and US GAAP?
90.
See, IFRS 210 versus net realizable value 203. This is lower, so use it as it is. In US GAAP, 210 versus replacement value, which is 197, which I would put a check that on the upper side I would have 203 NRV. Here I would have 203 minus 12, which would be 191. Since 197 is between these two, I can use 197 as it is. So 210 multiplied with, compared with 197, I am going to use 197. Should we move on? Yes, COGS would be higher. We are assuming inflationary scenario. Taxes would be lower because my profits would be lower. Net income lower. Inventory balance lower. Working capital lower because current assets are lower. Cash flow higher. Current ratio lower because inventory is lower. Inventory turnover higher. Why? Because numerator is higher, COGS is higher, denominator is lower. Debt to equity it would be higher. No impact on debt, but equity would be lower because less profits, so that ratio would be higher.
Sir, net income, your in case of its taxes will be lower. But
so you are saying these are contradictory effects.
No, yeah.
But tax would always be 30% of the difference between the two. If my COGS is higher by 100, my profit is lesser by 100. My tax is higher by 30 of that. So that impact of taxes would always be offset by the COGS. COGS would be substantially higher than those taxes impact. Are you appreciating what I am trying to say?
Inventory turnover.
Average inventory. COGS divided by average inventory. So COGS क्या होगा? Higher. Inventory decrease. So numerator is increasing, denominator decreasing, ratio has to be higher. Any questions? Should we move on? This is good. Company is not able to and this
First is positive and second one is negative.
what do you think? See, this is a good thing to have. Ideally, you should be happy if you see a company like this. Why? That if I was keeping raw material of 10, because I knew that after 6 months I would be able to sell only 10. But if I get a big order, typically all these companies would have an order book. So if I get a substantial order, I know that I have to deliver, I have to load up, I have to give more amount of output, so I'll keep on having more amount of raw material. But if I have good amount of finished goods, what it means is I'm not being able to sell. So you never want to stock your warehouse. It should be always full of raw material. It should not be full of finished goods. That means you're not being able to sell.
What is the difference? If we get big order, then finished goods are also would be there. Right?
The finished goods होने के बाद, why will you keep it with you?
Then why do you keep raw material also?
So you need to produce.
Then
आपको अगर you used to keep 1000 units of raw material. Let's say you manufacture, क्या करोगे? Furniture. So you produce furniture. You sell 1000 chairs every month. So आप 1000 raw material लेके आते हो, उसको प्रोसेस करते हो, और at the end of the month you sell 1000. आपको किसी ने 10,000 का ऑर्डर दिया. So how much raw material you will bring in? 11,000 now. You will process it. But then, the moment this is finished goods, you will go and supply it. So you will not have a very high amount of finished goods. But ये 11,000 एक महीने तक रहेगा ना? So raw material is increased because you had a substantial bigger order. So if raw material and work in progress is increasing, it's a good thing. But if finished goods are increasing, it's not a good thing. अगर customer नहीं कहता है at the end of that month, then you are in a problem.
But we should look those raw material increase and the finished good like in conjunction, right?
Yes, yes, you shouldn't look at absolute amounts. You relative plus compared with the previous periods.
raw material is always good. Raw material is always good.
Yes, yeah. I mean, generally 90% of the scenario is good. See, it's always contextual, so you cannot make statements like always. But yes, it's a good sign. फिर नहीं तो सर आपने जैसे बोला था ऐसे हो गया. चले आगे. This is interesting. This might answer your question, the question that you're asking. How do you change balance sheet?
Cash will increase.
You are shifting from LIFO to FIFO. So, current assets में, let me just make a list. Accounts receivable plus cash plus inventory. Will it have any impact on inventory? Yes, of course yes. So, your inventory will decrease. Inventory will? It will increase. And it will increase by what amount? It will increase by increase in LIFO reserve or amount of LIFO reserve? Amount of LIFO reserve. So your inventory is going to increase by the amount of LIFO reserve. What will happen to cash? Will there be any impact on cash? Yes. No, we are only on current assets now.
The tax is like
basically on the taxes that we will be.
Yes, Lakshmi. Cash. Cash will increase?
Cash will remain same. But if you are supposed to pay taxes after that then the cash will reduce. But if you are already saying no, let the tax will be same from the previous year.
Look, in from LIFO to FIFO, COGS will be reduced, so this will ultimately increase my net profit. So I have deducting the tax from the extra profit that I want, and deduct tax, and the remaining amount will have an impact on cash. So it will increase the cash post tax. And net profit, let's say, was 100 and
You have to pay taxes now.
so I'll pay taxes.
Are you saying increase of cash or decrease in cash?
Increase.
What do you say?
decrease.
What do you say? You don't say anything, huh? Increase.
There should be a DTA.
Huh?
There should be a
Okay, good. Wonderful. You can share for some time. Yes.
Will decrease.
सोच लो पहले.
Eventually it will decrease.
See, it was really simple that my COGS, my inventory balances are going to increase That means if my asset is increasing, to offset that my profit number is increasing, and which is very obvious because my COGS now is going to be lesser. So if my profits are increasing, I will have to pay extra taxes on those profits. So if I pay extra cash, my cash will now decrease, which means my cash is now going to decrease. Is this clear? Not clear.
My point is that if there is a reduction in COGS, my profit will increase by the amount of reduction there is in COGS. So my profit will increase by, let's say, 20 rupees. So I'll pay a tax of 20 rupees, but still I have a remaining amount which is.
Okay. See, there is a difference between accounting versus real economic world. I was having a debate the other day with someone saying that why chartered accountants are not good business people. Why chartered accountants never do good in business. Chartered accountants never manage their money smartly because they think too much from the accounting perspective. What is happening currently is, if I have inventory of 10, 10 and 10, okay, price is 20, 30 and 40. Let's say I sell it for 50, okay. So I sell 10 units for 50. If I am using FIFO, how much is my profit? If I am using FIFO, how much is my profit? I have sold 10 units. My profit is 300. If I use LIFO, how much is my profit? 100. If I ignore taxes, is there a difference in cash flow? See, understand the true economic scenario. That in real life, what's happening is I'm selling at 50. The person to whom I'm selling is not even bothered what method I use. Isn't it? So the true economic reality is that 50 into 10, 500 is what I receive. And whether I use FIFO or LIFO, that's not affecting my cash flow in any way. Yeah, what might affect my cash flow is that because of this, my profits would be different. That is still not affecting cash flow. But profits are different, and on excess profit, my taxes are more. Tax is a cash flow here. Is this clear? So, though you have more profit, it doesn't mean you have more cash flow. You have more profit of 20. So, on that, you have more tax of 6, which is a cash flow. Profit is not a cash flow. Is this clear? So, can I say now? So, can I say now that when I shift from LIFO to FIFO, because my profits will increase, my cash will reduce? And can we also find out by what amount my cash will reduce? Yeah, but what is that increased profit?
Tax rate into LIFO reserve. Yeah, LIFO reserve into tax rate.
Think again.
Over the period, like it's amount of LIFO reserve into tax.
Amount of LIFO reserve. What if it was for 5 years? Every year my COGS was lesser. So that LIFO reserve is an accumulated balance now. So all these years my LIFO reserve was higher. Now if I am changing it, for all those years I have to pay more taxes in this year. So I don't pay those extra taxes on increase in LIFO reserve, I pay extra taxes on entire LIFO reserve. So if my reserve was 500, my inventory balance will increase by 500. If tax rate is 30%, my tax will increase by 150, my cash will decrease by 150. So net effect is my current assets will increase by 350.
So, but it depends on the act also. If the company is supposed to change the accounting system.
No, we are not concerned with what are the taxation laws. We are giving the analytical treatment. So when I am taking a balance sheet, I want to compare that with FIFO. Then I don't care what the taxation law says. What if FIFO had used from the beginning? What would be the numbers today on the balance sheet? That's what I am trying to do. Is this clear? Pucho.
So, the only difference when you going from when you're taking cash is the difference in tax rate, tax that you pay. That will only be the difference
Yes.
in cash.
Yes.
And that difference will come only because of the difference in COGS.
Over the period of time. Like difference in COGS goes on and accumulates and becomes your LIFO reserve. Isn't it? So if your LIFO reserve is 500.
So that becomes your increase in LIFO reserve, right?
Just say in year 1 increase in LIFO, year 1 your LIFO COGS was 50. Your LIFO COGS was higher by 50. So in year 1 your LIFO reserve is, in year 1 your LIFO COGS was higher by FIFO COGS by 50. Then in year 1, your LIFO reserve is 50. Next year, LIFO COGS was higher by 20. So LIFO reserve is 70. Next year it was 30. So now it is 100. So now for all these years, the difference in two profits was 100. So I have to pay taxes on entire 100. So have you understood this? Should I throw the next question? What if the tax rate had changed? What if the tax rates have changed? In year 1 the tax rate was 20%, year 2 tax rate is 20%, year 3 tax rate is 30%.
Consider each year's LIFO reserve, change in LIFO reserve for the tax rate.
Then you would need the bifurcations, you would need financial data for last 5 years, that how is my LIFO reserve built, how much from which year, and then use respective tax rates and then find out the amount of impact on cash.
So what would if the company has negative losses in any particular year?
That doesn't matter. How would that matter?
But you don't pay taxes, right?
So?
So basically, there is no.
Fair enough. Even in that case, the treatment would be same. Even if you're not paying cash,
Right.
see, ideally, my intention of doing is to do it for an analytical treatment.
Right.
So, even if I am not paying tax, I created asset on the account of that losses.
Okay.
So, when you make losses, it turns out to be a tax asset to you. So, here it would help me create a tax asset. It would reduce my tax asset in this case.
And even if like the tax rate is different in next year, when the deferred tax assets would be calculated based on that particular year's tax.
Yes.
So let's assume that I do not consider this is only one business unit that I have run. And when I try to convert it from LIFO to FIFO, then there is a loss in some particular year wherein I did not pay any amount of tax, which I have not set it off against it. So at that point in time, what to do that LIFO with cash? And I do not have any other business, this is the only business.
And you are converting from?
The same, LIFO to FIFO. And I have not set off my capital loss on any loss that has happened in a particular year with any capital gain. So I did not pay any amount of tax. So when I convert it, let's assume that there was a LIFO reserve in any which case. So when I convert that reserve and when I probably deal with this cash treatment there, so how will I pay it? There is no outflow in that case.
In that case, it will reduce the negative balance of reserves that you will have on the balance sheet.
Yeah.
On the equity side. So now you will have to see whether the difference in these two reserves, is it offsetting than the negative balance that exists on the balance sheet. If yes, on the excess amount after that negative balance, on that you will have to pay taxes.
But even if
If it's less than that, you don't. If it's less than that, then you give the entire amount there. You don't pay taxes on that amount. If there is a negative balance of 25 lakhs and the difference in two reserves is 3 lakhs, hardly 3 lakhs, you just make it as 22. And here you show a higher inventory of 3. So 22 and 3 impact, offset it.
So when you change from LIFO to FIFO, you've been operating for like 5 years and then 6th year you plan to change from LIFO to FIFO. Why are you taxing the previous years also?
Because when I want to compare a firm's financials, if the firm which was using FIFO, those excess profits, had they used FIFO, those excess profits would have been on the balance sheet reserve side.
But they aren't getting cost of goods sold. So goods have been already
Goods are gone. Goods are gone, but profit is still there. And their reserves are more than mine. And difference in two reserves is LIFO reserve. Ideally, if that was the only difference in two accounting treatments.
So if we change from LIFO to FIFO, we have to retrospectively change.
We are not changing it retro. This is retrospective.
Retrospective.
Yes. But see, this is not an accounting treatment. That's why we are not calling it as retrospective.
Okay.
It is not an accounting treatment. It's an analytical treatment. You're doing it for analysis purpose. You want to compare.
If the company decides to change, for example, company decides to change, not for analytical purpose.
Okay. Then in US GAAP, when you change anything into LIFO, then the method, that's an exception to the change in accounting principle, then the method is prospective.
It's prospective.
Yes. For everything else, it is retrospective. So you'll have to see whether it's a change in accounting principle or change in accounting estimate. But this is an exception to it.
The change in
When you change into LIFO,
Okay.
from anything to LIFO, the method is prospective.
But what can we use it?
US GAAP. In IFRS, the question doesn't come. There is no LIFO. Are we set to move on? Simply add LIFO reserve to current assets. Any other component of current assets, which is going to be cash. Subtract the income taxes on the LIFO reserve from cash balance, but at what rate? That is going to be the respective tax rate of those years. How will you adjust shareholders' equity?
The entire LIFO reserve and tax that I had.
Yes. LIFO reserve adjusted for taxes will increase shareholders' equity. So if reserve was 300, tax rate is 30%, 210 will be the amount by which your equity will increase. This is your equity, this is your inventory, this is your cash. LIFO reserve is 300, tax rate is 30%. This will increase by 300, this will decrease by 90, net increase 210. Reserves will increase by 210. Makes sense, you're shifting from LIFO to FIFO, so your COGS is going to be lesser. COGS is going to be lesser, your profits are going to be higher. Profits are going to be higher, equity is going to be higher, so 210. Manoj.
LIFO reserve into 1 minus taxes.
LIFO reserve into 1 minus taxes. Should we move on? How to adjust COGS?
Cost minus change in LIFO reserve.
Simply take LIFO COGS and then say minus change in or increase in LIFO reserve.
Change in LIFO reserve into 1 minus.
Yes. Change in LIFO reserve, increase in LIFO reserve adjusted for the amount of tax. Manoj. How to adjust current net income? Increase in LIFO reserve is the difference in COGS. So if that is 300, increase in LIFO reserve. But profit 360 से बढ़ेगा तो tax बढ़ेगा 90 से, so net increase would be 210, which would be the increase in net income. Okay. I think what we'll do is we'll follow the same method that we did in your batch. That will finish and then we'll solve questions together rather than doing it topic wise in a test series. So in fact we can solve the same test on this class also. Any suggestions?